Traders, you can follow me at Gumby9662C, and like the video if you like it, and I appreciate all the comments and feedback you possibly can. I enjoy reading your stuff. At any rate, I think this is just day one of a multi-day up leg in this market, and that's why I'm not putting on any puts on. I know a lot of people are trying to short this, but what I'm seeing right here is where we're trading on the bond versus the XLF right now, and we have a comparative breakdown of this pair, suggesting to me we're going to likely to get a new trend, bonds lower and financials higher for the next several days. So I think there's still quite a bit of fuel in this tank for the financials. Now I want to also point out here your XLF versus your SPY, the comparative analysis. We still have not even broken out to new ranges yet. So I do think we're definitely going to retest the highs in this comparison. That further supports my thesis that we got more fuel in the tank. Another area that's kind of related to financials, that's your home builders and your real estate. And I'm thinking that quite possibly tomorrow we are going to start seeing a massive trend change in the home builders versus the S&P 500. So this is a relative basis, but I do think home builders are going to start outperforming the S&P, and we know how strong the S&P's been. So just keep this in mind as a bullish potential setup that's likely to hit any day now. And this chart here is the RSP, the equal 8 S&P 500. And I've said on several other videos, right up here is our trend line, and if our breadth of the S&P actually continues to catch strength, we have considerable upside potential on the S&P 500 if the breadth remains in the markets to finally get up here and fill this entire area. So just because we're at all-time highs does not mean that we are going to stop. Along with that massive bond sell-off today, we see monies coming out of the more defensive sectors, like XLU for one. I just mentioned a couple days ago that I thought there was potential for XLU to break to higher highs, but we came up, tested, and now we're breaking back down now. Another area that you're getting some negative results today, that's your consumer staples versus your S&P. They're lagging a little bit. Now they're up, but they're lagging versus the S&P today, so we're getting a negative tick on this read today. So just keep that in mind. Typically that's more defensive, and today it's a risk on atmosphere. Then also, typically your XLY is your more aggressive risk on sector for consumer products. But even today, the SPY was so strong, our consumer cyclicals are lagging the SPY today. So keep that in mind. Both your consumer staples and all consumer goods are lagging the S&P today. And as I showed in prior videos, your consumer staples versus your consumer cyclicals, we're just kind of hanging out here at the bottom of the range. It kind of looks like we're getting a rollover in more into staples despite today's aggressive move upward. And so that's a red flag of today's move. What's really getting hit today was based off the economic numbers that came in weaker than expected on consumer sales, and consumer or retail. The retail sector is really underperforming both the XLY and the S&P today. Another area that's underperforming the S&P today, that's your XLK, that's your technology sector, and we've got this uptrend, and we're still up here near this upper distribution, but we are showing some increased relative weakness on the technology, suggesting we're getting more rotation out of technology and quite possibly into financials. So just keep this as a warning that money might be starting to leave technology. Your industrials versus your S&P, very strong today. We got an inside day versus yesterday, but we have this triangle we've been in for a while. So just keep this on your radar. See how our industrials can perform. I'm thinking it's going to be pinned inside of this wedge pattern for a while, but this could be the next stimulus higher in the markets if the industrials were to catch a bid. Okay, some warning signs to have on the horizon, though. We had a very strong volume spike a couple days ago on our transports, and you don't really want to see in the markets if you're in a really bullish market. Typically your transports will lead to a bearish conclusion in the market. So when you see this is a major red flag. Okay, so far today we're up a little bit on our transports. Another red flag, like I said, I think money's starting to roll out of technology a little bit. And I mentioned a couple days ago how the semiconductors had moved out of this comparative uptrend. And today, despite the massive run-up in the markets, the semis are not really participating, including NVIDIA. So you should start looking to a short side or get out of your longs in the semiconductors, in my opinion. I'm seeing quite a bit of relative weakness in USO versus the SPY. Today, a lot of the energy sector's up with the entire market. But some things, we have you see this real low relative volume here? One of the times we had real low relative volume before, that was right before a major downtrend in the energy. And man, we have a major glut of crude right now. So, but I see a pattern change. We had higher volumes at these lows before for responsive buying. Well, we're not getting the higher volumes despite the massive move today. So that just really shocks me here on crude. So I'm thinking crude is setting for lower. It's a little too early to say here. I see ExxonMobil got a nice little short squeeze so far today. But we had above average volumes last time we were down at this level. And Friday, we got above average volumes down at this level too. And we're catching a little bit more of a bid today. So this is a responsive bounce point for XLE. It's just that USO chart is not meshing up with the XLE chart. So something just doesn't feel right with the whole energy space, in my opinion. Well, that's all I got to say. Hopefully this will clue you in how some of the sector rotations are happening here. If you are bullish to the market and you think there's a lot more room, I would think XLE to the long side is a low risk, high reward possibility. But if you think it's going to top out here, then this is probably one you want to keep an eye on for further low prices and stuff. Okay? At any rate, thanks a lot, and hopefully we can learn stuff.